with the potential rise in interest rates? Should I be moving in or out of commodities?
Interest rates can affect commodity prices. In fact, there's some interesting research from Harvard economist Jeffrey Frankel claiming that low short-term inflation-adjusted interest rates tend to boost commodity prices, while high real rates have the opposite effect. That's because low real rates reduce the cost of carrying commodity inventories and also tend to spur economic growth, which increases the demand for commodities. But even if you really knew which way interest rates were headed, I think it would be a mistake to move in or out of commodities on that basis. One reason is that there are a lot of other things that can influence commodity prices, ranging from inflation expectations to underlying demand, and, in the case of agricultural commodities, the weather. And let's not forget that commodities often attract hot money looking for fast profits. That can cause them to run up in price quickly and plummet just as fast. Witness silver, which more than doubled over the last 16 months and then lost nearly 30% of its value over the course of 5 days in late April and early May. My advice, if you really must get into commodities, limit them to a small portion of your portfolio, say 5%, for the purposes of diversification and hedging against inflation, and get that exposure through Natural Resources Fund or an ETF that invests in a broad range of commodities. But unless you're looking for excitement and willing to pay for it with potentially heavy losses, I advise against speculating in commodities on the basis of interest rates or anything else.